how much do you, yeah, you want to know how much you would qualify for. I would say there is some preliminary homework you may have to do, and I'm going to have to bore everyone with math only a little bit, I promise. And so different lenders will have different qualifying ratios. So what your qualifying ratio is, it's going to consist of two things. So it's going to be your front end ratio, which is your cost of your housing, which in terms of your total housing, principal, interest, taxes, insurance, and if need be, any kind of PMI that you may have as well. So it's just your housing expense. The front end ratio is going to vary from lender to lender, but generally speaking, your housing expense shouldn't exceed 28 to 33% of your gross monthly income, your pre-tax income. So 28 is on the conservative side. You'll see it go as high as 33, maybe higher than that in Jerome's world. And then the other factor is what's called your back end ratio. So your back end ratio is your housing payment on top of all the other debts you may be carrying. So it's including, but not limited to, any kind of car loans, car leases, student loans, or if you have any kind of like wage garnishments or anything like that. So your total debt should not exceed 38 to 43% of your gross monthly income. And I'm going to circle back to my spiel on the gross monthly income as well. So just to kind of determine this is just think about, what your current pay rate is, whether it's salary or if it's hourly. You're just going to take that monthly gross monthly income, and if you're typing it in a calculator, you're going to multiply it by 0.28 or 0.33, and that is right around where your mortgage payment should look like in order for you to qualify. And then your back end ratio, add in all your other debts, and then that'll kind of give you an idea as to what your back end ratio would be. So in shopping around and finding a lender, your qualifying ratios may be part of the preliminary conversation you would have with a lender, but if you end up finding a lender, you really like their rate or their location or their convenience, typically a lender will need the following things. One of the most common questions is, okay, we've had this conversation, how do I get started? So typically a lender will need a completed application, whether you do it by hand or you go online, and the lender will provide you a link to complete the application. Typically, along with the application, what they'll need is 2 most recent years tax returns, both personal and business. 2 most recent W-2s if you work W-2 income. Year-to-date profit and loss if you have any kind of self-employed or business income. And 2 most recent years 1099s. So the 1099s is for any kind of self-employed contract work. 2 most recent pay stubs, and 2 most recent months bank statements. So the bank statements are crucial to understanding how much you're saving, if there's enough to make your purchase on top of your settlement costs, but also to see if there is enough for a cushion. God forbid anything were to happen, the lender has a warm and fuzzy that you have like a rainy day fund. So you might be asking, that seems like a lot of documentation. Why do we need those things? So we just want to be as annoying and irritating as possible, right? We want to be the bad guy. No, that's not true. That's not true at all. So the reason we ask for that is because a completed application will allow most lenders to run credit. So when you may have a preliminary conversation with a lender, what they may do is that with your permission, and if you provide them with, your social security number, they may do like a light credit pull to kind of determine what your score is. But an application will allow us to not just pull scores, but also take a look at your credit history, your payment history, and any other debts that you may be carrying too. So this also provides, application also gives us an idea as to what your work history is like. Typically, most lenders will be looking for a 2-year history of steady income, and an application will also help us understand in your veteran or your military status. Me personally, I work for a portfolio lender. That means we hold all our loans in-house, but we don't do any kind of like FHA or VA financing. So sometimes when I see on an application that there is an applicant that is that needs to serve or is currently serving, I usually ask them, like, have you checked any kind of VA lenders? USAA is a big one as well, and they may actually have very competitive rates. But it also kind of helps us understand you, even if we haven't met in person. And this, should you decide to do so, will also, the application will allow you, should you decide to do so, disclose your demographic information. So this will help us, and any kind of regulators ensure that no matter what bank you work with, that we are lending out equitably across the community at large. So along with the application, 2 most recent years tax returns, W-2s, and a year-to-date profit and loss. So those that work W-2s for another company, for example, at this point, if you were to apply, it's 2022 now? Yeah, it's 2022 now. So we'll need 2021, 2020 W-2s, and as well as if 2021s haven't been filed yet, we may ask for the 2020 and 2019 tax returns at this point. So we're asking for that because the underwriters are going to be looking for stability and continuance of income. And there will be special considerations for those who are self-employed. That doesn't necessarily mean that folks that are self-employed are harder to approve or easier to approve. What that means in terms of self-employed folks that work seasonally, like for example, if you have someone that is working in the summer, doing lawn work, but then in the winter they are, taking care of like plowing and snow removal. So they have that kind of seasonal income, but what the underwriters can be looking at is a 2-year history of that. So it's essentially just to kind of help us understand what you are bringing in. So the 1099 income includes the dividends, any kind of interest income, self-employed people, contract, freelance work. I know for me personally as a writer, but there's also artists, musicians out there that have royalty income, painters, photographers, but other forms of income is just your pensions, IRA distributions, and your Social Security income, which is either a 1099-R or 1099 SSA. So you may be wondering, hey, I'm a first-time home buyer. I'm not taking any retirement distributions yet, or I'm not taking any Social Security income. That's perfectly fine. I just bring this up because it is what the underwriter will be asking for in the event that we're working with a borrower that is of retirement age. And sometimes I find that when we have these classes geared towards first-time home buyers, sometimes people who have been a homeowner their entire lives, this is their first time moving. So lending now has probably changed dramatically since when they first took out a loan. So this is why I just bring this up. 2 most recent pay stubs. This will go a long way in helping us, understand what, your pay rate is. And most lenders will use, if not all actually, will use your gross monthly, your pre-tax income. So what I hear a lot of the times is in the event you end up working with a lender that, or at a bank that you also have your deposit accounts at, I'll often hear from people, well, hey, you already have my deposit accounts. Can't you see how much it is I'm making? And while that may be true, what is going into your deposit account is your post-tax income. So that only just gives us a small, inadequate idea as to what your pay is. The underwriters can be looking for your gross pre-tax income. That's the number that they're going to be working off of, whereas what ends up in your account is after your Social Security taxes, all that comes out as well. And I don't know about everybody else, but my pre-tax income is a lot more fun than my post-tax income. So it is in your best interest to provide the pay stub so we know what it is that you're earning before Uncle Sam gets a slice of the pie. So and then if they see that you frequently have, when I say they, the underwriters, see that you frequently have overtime or any kind of bonuses, whether that's yearly or monthly, they actually may ask for your year-end pay stub, your very last pay stub of the year. So this way it'll have your year-to-date, but this way if you frequently do overtime and you get bonuses, that will contribute towards the 2-year average that they're going to be looking at. 2 most recent months bank statements. It kind of goes without saying, but this will, this will be lined up with the income that you're going to be providing, but also helps us source any kind of large deposits. When I say source large deposits, it means like if you are getting any kind of gift from a, parent, relative, anything like that, they're going to want to see, where that money came from, but also too, if there's any kind of large transfers or I've seen Venmo deposits, they're going to want to source that. And then also too, your bank statements will also show us, if you have like adequate cash to close. So that includes your down money and your settlement charges as well. Some lenders will want to see at least 1 to 2 month payment cushion. So on top of your savings and the money you need for the down money, settlement charges, they want to see that you have at least, a small emergency fund, knock on wood, God forbid a rainy day were to occur, that there is enough there to carry the loan for at least, a few more months. Hopefully it doesn't arrive to that, but that is something that lenders do look for as well. It's best to, have these items ready, whether that's, online, in person. Sometimes when I have conversations with potential borrowers, we would actually fill out the application there face to face, and it's best to have these documents ready ahead of time. And often I'll make copies for folks because obviously we don't want to keep the actuals, but this way we have it then and there. Another way is to, once you, complete the application online, there will usually be an online portal or a secure email exchange. So if you have these income documents in PDF format, you can safely upload it that way, and your lender can usually print it out on their end. So, I can't stress the importance of a pre-approval, especially in this very, perpetually competitive environment. And because you want to have your money lined up. And before, just like anything else in life, before you go, buy a car, you go grocery shopping, you want to make sure you have your wallet with you. I just want to tell you a story about this one pre-approval that always sticks out in my head. This gentleman came in and, he provided his 2-year history of income, his application, and we were able to get him pre-approved. However, we gave him a commitment letter, and he went out shopping with it. But each time he made an offer, it just fell through. It just fell through. It just fell through. And he was very healthy, and so he was just like, "Well, what's going on?" So I said, "Why don't we go back, take a look at your commitment, and we'll clean it up a bit and see how you do." So a lender will issue a mortgage commitment letter for you to kind of go shopping with, or a pre-approval letter, if you will, to go shopping with, but it may come with a list of conditions. Like, for example, if we're missing funds, or if we're unable to source funds, or if we need like a, copy of a check, to see where it was coming from. or another set of bank statements, anything like that. If you bring those documents in, it'll help us clean up that commitment. So that way, when you're ready to go make an offer, the seller is going to know that you're ready to hit the ground running. And, essentially at that point, all you need to do is order the appraisal and title work, and then, we're ready for settlement. Easier said than done. So I always say, provide any additional documents that, your bank may ask for as quickly as possible to have a cleaner commitment and to make you so much more competitive. It may seem annoying sometimes, and it may seem like we're asking for the same thing twice even sometimes. But what happens is, depending on how long the pre-approval process is, when I say, the pre-approval process, I mean just your shopping portion, your pay stubs may go out of the date. So we may ask for updated pay stubs, obviously to make sure you still have a job and you're still getting the same pay rate. But also too, depending on how long it goes, at that point, we may have to get an update on your assets. So we may ask for additional bank statements. Yes, it may be annoying, and I understand that, and it's not lost on me, but we will ask for those things to make sure that you are as prepared as possible. So that way, when you have a commitment letter and you go to your realtor, you guys can team up and, be so much more competitive. So I don't know if I went too fast or too slow, but if you have any additional questions, comments, concerns, anything like that, my name is Chris Anderson. My contact info is down here. Jerome, who is also on the panel as well, he works more on the secondary market side, but his contact information is here. And, he will give you the time of day, I promise you that. And I will too. So, and we're not on here to kind of, peddle our wares. That's not what we're here for. This is an educational event. But if you have any questions, don't feel you're obligated to anything. Sometimes I have people just calling me just to work up numbers to see what it looks like, and I happily send it to them so that way they can kind of take a look at it. And sometimes people just call me with questions just to talk, and that is perfectly fine. Your lender should give you the time of day, especially in this very competitive shopping environment right now.